opening bell, left SMF. Oh, welcome to stockmarketfunding.com. We do care about you. For the people that are in the school and the people that are trading live, and we had traders that pop this is called the left elbow gap down. It's met with the green bar. Half of the SMF Pro Trader bar is where you buy it. As long as you don't close below that left elbow gap down 3-minute bar, you're good to go. And now we are shorting the top of the move because the left elbow gap down, whether it was on indexes, whether it was on whatever type of stock, the left elbow is always this way. That's the SMF Pro Trader bar. You gap down, the buyers move in immediately. They didn't even take it down even lower. And if you don't pull the trigger and set the stop market here, you're not going to get that move, which was a beautiful move. And we had some traders get it. Now we popped a 3-minute, 6-minute, 9-minute, 12-minute buy signal, where on the MACD we had that sell signal. You can see the ascending effect. If you want to learn more about what I'm talking about, go fetch our other videos that talk about these issues. And it does tell you exactly what the issues are on this 3-minute chart. And the issue that I want you to know is that the left elbow gap down. It's something that we do here all the time. Apple, on the other hand, had a dollar drop 3 times in a row almost. And then they came back in. And the difference between this chart here, let me show everyone, is it's a right elbow. This is the right elbow up, right elbow gap with a 3, 6, 9, 12. You had a couple of dollar drops and you're overbought. You're at 90%. You will come down, and Scotty will short this when it fails and it's already dropped. You can't be shorting bottom moves. You got to short them when they're up here at these highs. This one is the fail. This is a failure gap. As we move throughout the trading day, that's the high of the day. We put in 3 different highs. I can show you how many highs we put in. 189 versus 55. But guess what? We're going to get overbought where a reversal comes in. We are short again. This is the 3rd time from that right elbow gap up on Apple that you dropped a dollar twice here, and you're working on another dollar drop here. So there was 3 trades short, and there was a couple of trades that you could have gone long on during this opening right elbow gap up consolidation, dropping down to support, not breaking half of this Pro Trader bar right here. This is the key bar. You held it twice, you bounced. When you do fail there, you're going a lot lower. But once again, I will prove to people on this tape that you have dropped another dollar off of the freaking high. That's 3 times during this right elbow gap up here that you have dropped a dollar in each trade and could have made $1.70-80 versus this one here. This is the right elbow gap down, left elbow gap. Look at that. Nothing but burn. And now you pull back, and roughly you have pulled back darn near $2 off of that high already. And these are the kind of trades that you're taught how to do here. And our system will plug you in. It will make you buy it. It will also make you short. It'll also make you keep stop losses. All right. What I want to say for the new people in the school is that the left elbow gap, this is a right elbow gap up, right elbow on Apple, and once we pull back a dollar, we're going to go back in again. We're going to go back in again because I'm going to get more overbought here on the 3-minute. And as that trend line up there, Scotty put the short out at 226.90. Right now, put it right up there. 262.80. How's that? And that's, another failure would be right there. Well, if you don't break above 50 cents, you need to short it at 49 pennies. So you got different levels there in your formulas. Back to the Google trade on the opening bell. Is that Google, once they get that left elbow gap down, Buddy, this is where they buy. They never want to see this price again. The market makers made their spread. They got this side of that left elbow gap down in their book. Now, from the top down, they'll make that spread, and they'll have two spreads. One is the left elbow gap down, buy, and another is that if it does fail, they'll get the short down. So they're making money twice, and that's what SMF does. It teaches you how to be a market maker on an intraday level and mastering our system. And basically, I've got a nice tone. We went gap big down. We moved back in. This is part of the bottoming effect that we trained everyone on. And you're seeing it in play, and you're not even open. You're open 32 minutes.